How does sector level divergence create fixed income opportunities? Hi, I'm Matt Wrzesniewsky. In this video, I'll provide some examples of where opportunities can be uncovered in specific fixed income sectors. We'll also look at why this is an enduring market for bonds and what that means for active bond pickers. When we step back and look at the bond market today, this is one of the most enduring environments for fixed income investing that we've seen in years. First, yields are attractive. The US aggregate index yields more than it has roughly 77% of the time over the last 15 years. And that matters because coupon drives return in fixed income. Second, inflation is receding. The CPI data shows that it's moving closer to target, which gives bonds room to do what they're designed to do, provide income and ballast in portfolios. And third, economic growth remains resilient. Growth is above trend, and that combination of solid growth, moderating inflation, and elevated yield creates a favorable setup for bonds. I like to describe this environment as heads you win, tails you win. Income is doing the heavy lifting, volatility is creating opportunity, and bonds are once again competing with cash and equities for capital. So in short, it's not just a tactical moment for fixed income, it's a structurally attractive environment, especially for active managers who can navigate dispersion and manage risk thoughtfully. We're in a bond picker's market. Dispersion is rising and returns are being driven by issuer fundamentals, not broad market moves. Now, AI is an important topic, but in credit, it's a little bit different than in the equity market. Credit markets are broader, less concentrated, so we stay focused on cash flow certainty as active investors. Now, some of the best credit examples today aren't the most exciting ones. Think about everyday businesses, things like distilled spirits, food staples, where there's habit-driven demand and predictable cash flows. In a market where disruption is rising, boring can be beautiful, and disciplined credit selection is what drives success in a bond picker's market. So at the sector level, AI-driven hyperscaler issuance has revalued the technology sector within the investment grade market. This is also in contrast to banking fundamentals, another sector which has been particularly strong. So as a result, more recently, technology trades a bit wide of banks. Now, this is the opposite of past relationships. At the issuer level, markets are focusing on perceived AI winners and losers. And even within technology, credit spreads are moving in the opposite direction, reflecting very different views on business durabilities. So that dispersion across sectors and issuers is exactly why this is a bond picker's market ripe for active management. Be sure to like this video and subscribe to this channel for more insights from Vanguard's thought leaders.